Good morning everyone, and welcome back to the channel. It's Wednesday pre-market and the market is heating up again around Opendoor Technologies, ticker symbol OPEN. Yesterday's trade was full of emotion, full of mixed signals, and ultimately, full of opportunity. While many expected continued weakness, Opendoor surprised us all and closed in the green, proving once again that the $2 level is more than just a number, it's a psychological battleground. Let's get right into it. The stock spent most of the day swinging between red and green, reaching an intraday high of $2.21 before pulling back slightly. But what matters is where we finished, comfortably above that key $2 threshold. In fact, we ended up about 2% higher on the day, and aftermarket action continues to look constructive. That small but firm move to the upside has bulls feeling optimistic, and it's not just blind faith. There are actual, concrete reasons to believe that this story is far from over. Let's take a step back. Just a week ago, the stock was under serious pressure after dipping sharply from nearly $5 all the way back to the low $2s. But even with Monday's painful 12% drop, we're seeing signs of stability. And if you've been following this channel, you know we've been saying all along, don't count Opendoor out. This is a stock with a lot of volatility, yes, but also one with massive upside potential if the pieces come together. One of those pieces? Short interest. We have to talk about the short positions again because they continue to be a key part of the story. Many of the traders who shorted this stock did so at or below $1.50. That means even now, after the dip, those positions are sitting at a loss. And when shorts are losing money, the pressure builds. It doesn't take a new all-time high to create a short squeeze. All it takes is price action that forces short sellers to think twice, to sweat, and eventually, to cover. And that's exactly what could happen if we see more sessions like this. If Opendoor starts inching back toward $2.40, shorts could begin to unwind their positions, giving us the type of momentum that turns a sideways grind into a new rally leg. In fact, that $2.40 level is emerging as a potential resistance turn target. If bulls can recapture that zone, it could spark a technical breakout, especially with broader sentiment still relatively strong. Speaking of sentiment, let's talk retail. Across Reddit, StockTwits, and X, Opendoor remains one of the most talked about tickers. Traders are comparing this to other former meme stocks that came back from the brink, and while the hype factor is real, there's more than just memes driving interest here. This is a company that plays in a real industry, solving real problems in a housing market that's quietly beginning to stabilize. Let's not forget, Opendoor is in the business of buying and selling homes. That's a capital-intensive game, and the macro environment matters. The good news? Recent housing data shows that things are turning. Mortgage rates are no longer climbing aggressively. Buyer traffic is up in some key markets. And inventory, while still tight, is beginning to loosen. That's bullish for a platform like Opendoor that depends on liquidity and transaction volume. We also need to revisit the special shareholder meeting and the reverse stock split vote. As of now, we still haven't seen the official results from Monday's vote. The company hasn't filed anything definitive with the SEC, and that's keeping some investors on edge. But remember, Opendoor's board has already communicated that they would only enact a reverse split if it's absolutely necessary to remain Nasdaq compliant. They're not doing this for fun, they're doing it, if at all, to keep the listing intact and keep the company in a position to grow. But here's the thing, as each day passes without news, the importance of the vote itself seems to be diminishing. Why? Because the price action is beginning to speak for itself. We've tested $2, we've held it. We've bounced. And now we're looking toward potential catalysts like earnings to carry the story forward. The reverse split might still happen, but it's no longer the center of the narrative. Instead, it's becoming just one small element in a much bigger picture. And that picture is earnings. Opendoor's upcoming earnings report, expected in August, is shaping up to be the most important event on the horizon. If the company can show meaningful improvements in unit economics, even modest growth in revenue or a reduction in net loss, it could light a fire under the stock. This isn't just a numbers game. It's about showing the market that Opendoor can operate more efficiently, scale more smartly, and inch closer to profitability. There's already buzz about the long-term potential. Some analysts, yes, real analysts, have floated price targets as high as $82 over a multi-year period. That might sound crazy now, but it's worth noting that those projections are based on real data and long-term execution models. If Opendoor gets its act together and the real estate market turns even slightly more favorable, it could start trending toward a whole new valuation zone. That's why each day of consolidation above $2 matters. That's why today's modest gain matters. It's not about hitting home runs every session. It's about building a base. About creating a platform for a more sustainable rally. We've seen what this stock can do on momentum. Now we need to see what it can do on fundamentals. In the meantime, keep an eye on the usual signals. Watch the pre-market volume. Pay attention to aftermarket chatter. Look for signs of accumulation. If we see price action pushing back into the $2.20s and then the $2.40s, shorts are going to get uncomfortable again. And with retail still engaged, there's enough fuel to create real follow-through. So where does that leave us? Opendoor stock is stabilizing. It's found support. The reverse split issue hasn't tanked the stock. Shorts are still under pressure. Retail is still showing up. And earnings are coming. That's a lot of reasons to be cautiously optimistic. To those of you holding, stay sharp, stay informed, and stay patient. If you're thinking of buying, make your move strategically. And if you're on the sidelines, keep watching. This story isn't done, and the next chapter could be explosive. If you got value from this video, hit that like button, drop a comment below with your thoughts on today's trade, and don't forget to subscribe for daily updates. We'll be back tomorrow with another deep dive. Thanks for watching, and as always, good luck in the markets.